The second step to the cash accountability section of the audit is comparing your totals during the cash out process as noted in your back office system. So Luke walked through the physical accounting of your store deposits by looking at your Z-read totals, making sure everything's done correctly. Now we're going to look at the second step, and that's what's done at closing, the cash out process, store safe balances, making sure that's done daily. To do that, you're going to go into your back office system. You're going to select Daily Ops, F3. Then depending on what you're looking at, you're going to select one of the options here. For the first part, we're actually going to verify that the variances listed on the daily deposit log match what they did at cash out. To verify this, you're going to select F4, Cash Out. And then across the top, you're going to see several tabs. Go to Store Variances. And on this tab, it's going to list the total variances for the store by day. If you wanted the breakdown by register, you could actually select History, and that would give you the breakdown by register per day. But for the sake of this audit, all we want to do is look at your total variances. Your total variances for that day must always match what's listed on the deposit report. These variances come into the system during the cash out process. So for the period that you audited, you would simply highlight the day and then just go down and make sure that each variance listed matches what's noted on the daily deposit report. If it doesn't, that's probably where you got into the Z-read question that Luke was referring to earlier, where the Z-read totals didn't match what was deposited. So what you need to figure out is which one is right. Is it right at the cash out in the system, or was it right when they prepared the deposit in the back room? The driving factor that's going to be the actual deciding factor for that is going to be what was actually deposited, what the bank counted. So after doing that, while you're in the system, the next thing you can do is you're going to escape out of that, and you're going to go to your store safe function, F5. The store safe needs to be counted. This store safe also actually includes your floats for your register tills as well. So if it's a $100 till in each register, that includes those amounts. What you want to do is make sure that there's an opening and closing safe count every single day. So on the far left columns where it lists the dates, you want to make sure that there's an opening and closing every day. It also gives you the time that that store safe screen was accessed. So once you determine that you have an opening and closing every day, the next thing you want to do is make sure that it's accurate. Okay, all your totals across this actual column should always be the same amount. If your deposit at the end of the night, or if your safe at the end of the night is short for whatever reason, maybe you incorrectly did a change order, you were supposed to go make change in the back and you forgot to put the money in there, you're going to short your deposit or over your deposit to make that accurate. So your ending balance should always be the same. Your starting balance should always be the same too, because hopefully you don't have someone coming in and stealing money in the middle of the night. If there is a variance, it happens somewhere between closing and opening, or someone not counting correctly. But theoretically, they should always be accurate. If they're not, that's when you need to determine, is it something with the safe funds, or is it something with the cash out process? So when reviewing the variances in the store safe for this day, I saw that on the 24th, they have an actual balance of $390.59 with an expected amount of minus $209.41. You could actually drill down to this even closer to find out exactly what happened. Was it something during the cash out process? Did they count their funds inaccurately, etc.? To do so, just highlight the day that you want to look at and hit F4 Select. Now I'll get a complete breakdown of what happened on that day. Once I selected the day that had that variance listed in the expected column, you want to basically try to figure out exactly why is there a variance. What step did we miss, either in the cash out process or the store safe process. So once I hit select, you can get a breakdown from this screen of what the starting balance was in the morning. This is what your opening manager counted for your store safe, which was $600. The total cash outs is a 0. What that is basically when they cash out at the end of the night and they're entering in their actual amounts that they physically counted during the closing process, it gets entered at the cash out process here. So if they had cashed out correctly, we should see a 209.41 here, but we don't. We show a 0. Going down, we see that your total bank deposits is 209.41. Your total bank deposits is what you enter in after the cash out when you go to close out your store safe. The bank deposit key is highlighted on the bottom. It's the F5. They would key in what the bank bag number is, the cash total, check total, and the deposit amount. So it looks like they actually entered in the bank deposit. They just did not cash out register 1 and register 2 correctly the night before. This is what's creating that 209.41 variance that's listed in the store safe screen. On this screen here. So that's a separate question on the cash accountability, making sure that the cash outs are done accurately and correctly every night. So this is something that's different, and because it's coming from the system at the cash out at the end of the night, not in what you're looking at on your daily deposit log when you're comparing your Z reads and making sure that all the funds are accounted for. Another thing I do or you should do while you're in your back office system is you go to your time and then associate maintenance, or F6, and then from there you're going to list of all team members who are authorized to ring on the registers in your back office system. What you want to do is make sure that everyone that's listed on that screen is current. Those are all current team members who are working in the store or neighboring stores. And then you could also check their security groups. Make sure that you have them set up as the right type of team member for your store. For example, an assistant manager, a store manager, or a sales associate. To do that, you can just either double click on the individual team member or hit edit and then select F6 security groups, and then you're going to look to see what kind of security settings you have. Make sure that that's always accurate. Also, while you're in here, you might want to go to inventory, go to your transfer in screen, and from there you want to see if there's any outstanding transfers that are in their system that they might have received in the store. To do that, just like we troubleshot during the receiving video, you could double click on a applicable transfer, select items, and then do a search for those items on the floor. You can either physically look to see if they arrived in the store, or you can go through the system and see if you had sell-through of that product. But that's another quick check mechanism you can look at to make sure you don't have a bunch of outstanding transfers and POs in your system. Okay, so just to recap with the cash accountability and high-risk POS transaction categories, if you're taking your media envelopes, roughly 14 days worth, you're comparing all the funds that you're supposed to have, cross-referencing that with your daily deposit log, and just making sure that we're accounting for every nickel, dime, and penny that flows through our store. Okay, variances must be annotated. One of my biggest pet peeves is slush funds. You know, when I go into a store and I see loose change lying around, and just coincidentally, they balance perfectly every single day, even the week before Valentine's Day and the week before Christmas. That tells me that they're probably force balancing their registers, and they're not accounting for that loose change or the change that customers leave behind. That stuff happens. It's part of the business. We expect it. What happens is when we force balance our registers so it looks like we're perfect every day, is that A, it doesn't identify any kind of training concerns. You might have a sales associate or team member who doesn't know how to count change back to the customer. So you might be even shortchanging one of our own customers or guests. On the other side of it, if we do have any kind of fraudulent activity going on in your stores, such as fraudulent returns or fraudulent voids, we look at those variances basically to solidify some parts of our investigation. So we need to have accurate counts of what you guys are cashing out at the end of the night. Not any kind of force balance in the registers to what it was supposed to have, but what we actually have. A lot of those other questions on the audit, be familiar with. They're self-explanatory in those categories, such as counting down the register, counting down the safe, emergency keys need to be locked in the easy audit bag. Things like that, just know what those questions are and look for them while you're in a store doing your audit, or if you're walking through your store looking at your own paperwork. Know what those discrepancies are. Call them out when you see them being made. The next two categories of the audit is asset protection and safety, and awareness and training. Like I mentioned earlier, the key to these audits is just being familiar with all the questions in it. You know, we're not going to go through and list every single question and what we consider an exception. They're pretty much self-explanatory, but know that we're looking at these things and that you should be looking at them, because everything in the audit is designed to make sure that we're maintaining operational control and we're going to be safeguarding our assets and protecting our profits.